Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a fantastic day. As always, leaving a like, that was a hint, leaving a comment or subscribing, all of these things do help out the channel immensely. And without further ado, let's jump right into it. In what can only be considered very confusing futuristic news, the world's largest crypto exchange by trading volume, Binance, has released a new non-fungible token loan feature. According to a new Binance announcement, the platform will offer zero gas fees and the ability to borrow Ethereum without the need to sell any of your assets. The loan feature aims to cater to those who want quick access to funds but don't have the funds and also don't want to part with their NFTs. It uses what Binance is calling a peer-to-pool mechanism, with Binance NFT acting as a loan pool, and the amount of ETH that users can borrow depends on the floor price of their NFTs. Data from the system comes from multiple sources, including Oracle service Chainlink and NFT marketplace OpenSea. So there's a lot to unpack here, and I will try to be right. So the idea of lending out anything within the cryptocurrency space, for those of you who don't know or who actually care, kind of goes against the entire idea of crypto. Cryptocurrencies, nay, Bitcoin, were created as a way to get out of debt, in that we would never need to get into debt, or we would be able to kind of have a more transparent system, because we would always be able to see how much Bitcoin there was or is on the blockchain or a wallet at any given time. The idea is that banks lie. That's not anything new. That's not a tinfoil hat. That is simply the truth, in that they will tell us that they have X amount of money inside of a bank or a bank account when they actually don't, and therefore people have bank runs. We saw it a couple months, weeks ago. People completely lost their minds upon figuring out that banks were actually completely terrible. So the idea is that loaning out something and or getting into debt against cryptocurrencies is meant to never be an actual feature of the system. Binance is a company. They're centralized. I get it. Cool. Digging a little bit deeper, the idea would be that if you happen to have a popular cryptocurrency NFT project or whatever the case might be, you're then able to loan against the actual value of that for Ether. But in turn of doing so, the same exact way if you were taking out any other loan, if you can't pay back that loan, well, guess what? The holder of it, the current holder, actually ends up keeping your NFT the same exact way that they would with any other form of debt. These are very intricate traps that I'm a little sad that we are seeing. We've seen things similar to this, but now they're becoming quite more prevalent as we continue to have a merge, a gigantic merge of the old and the new system. The cryptocurrency system is meant to act as its own world with no actual interaction from the other system except for people cashing out of fiat. We are going to see, I predict, in the next 2 years, a lot of people who have actually lost their NFTs because of projects like this. Because if Binance launches it and it ends up working, and Binance is making $50 million per month in fees or whatever the actual case might be from all of these things, a lot of other people are going to use it. A lot of other cryptocurrency exchanges will be implementing the exact same thing. It's a very clever way. It's kind of the same when people sometimes may refinance their home or do other things like that. The bank knows what you're trying to do, but they're hoping that you default. The idea is that the house is always supposed to win in this sort of way. So this was touted as like a very cool feature for you to be able to get, dude, you don't have the money, just come to our platform. We'll totally give it to you. It's the same exact thing with a payday loan. If you have never heard of a payday loan, count yourself very lucky. If you are interested, go watch a documentary on it. They are incredibly shady in that they will say, but you need money to do stuff. So you'll go to them, you'll take out a loan or you'll take out some kind of money in some sort of way, and the interest rate on them may be absolutely egregious. It's meant to trap you. Debt is always meant to trap you in some form or another. Even if you consider, if you tell me the whole like real estate and good debt and kind of stuff, but it's meant to create a continuous drip from you to the bank for 30 years. So even if you are in the spot where your mortgage happens to just only be $1,000 per month, the bank knows that they have a guaranteed $1,000 from you for the next 30 years. It is meant to entrap you in the snare to keep fueling the bank. At the time of writing, Binance's NFT loan platform will give precedent to the Bored Ape Yacht Club, the Mutant Ape Yacht Club, Azuki, never heard of it, and something called Doodles. The innovative feature introduces the benefits of decentralized finance. Oh, that's always a red flag for me. To the Binance NFT community. More collections are expected to be added in the near future. So, cool. That's the Binance NFT platform news. I am always wary when it comes to debt. I always try to make sure that you know that these things are happening out there as well, so that you can also understand that, rather what these platforms are actually for. That's the Binance NFT loan platform. Not needed, but they're going to get people to use it news. And yeah, let's move on. Also in the news, in order to bring inflation under control, the International Monetary Fund has advised the Federal Reserve of the United States of America to maintain hiking rates for a longer length of time. The International Monetary Fund has also recommended that the Biden administration use stricter fiscal policies to bring down the national debt, not to raise the debt ceiling, but to bring down the actual debt. Countries don't actually care about their national debt because they know that it will never actually be paid off. We've gone over that before. It's not tinfoil hat. The idea is that they know that if any country says, give us our money back, it creates a cascade. And then quadrillions of dollars are evaporated from the market. If you don't think that there are quadrillions of dollars, I can't really help you. You can look it up and find this stuff on video. Almost said VHS. Yes, you can find all this information right now on TMI VHS, and it'll definitely be at your local Blockbuster. The other part is that we're getting whispers and rumbles of that the Fed might not be done raising interest rates, and it's actually causing a lot of markets to kind of look a little shaky, because we believed and were told before that we would see an end to interest rate hikes now, basically, but that might not actually be the case. Under these conditions, the Fed would raise interest rates by another 25 points in June. International Monetary Fund Managing Director Kristalina Georgieva recently said that the yearly appropriations process is not the only means through which the U.S. Congress may limit their debt. U.S. Federal Reserve members are unanimous in their view that the FOMC must keep hiking Fed rates. That's actually not true. Fed members are actually split on if they need to raise the numbers anymore. I believe it was it Texas and New York? I don't remember. Those were two of the ones who were in favor of continuing to raise it. The idea is they now want to raise interest rates to above 6%. Basically meaning that as we are between 5 and 5.25%, we would then have to see another 3 more rate hikes, continuing to absolutely decimate world markets in an attempt to get inflation under control by the people who were printing so much of it. Yeah, so this is going to be it's going to be a fascinating summer, I think. One of two things is going to happen. It sounds redonkulous, but we are either going to see the stopping of interest rate hikes and markets are going to jump through the roof, or we are going to see June, July, August, maybe September, other rate hikes, and cryptocurrency markets and world markets will continue trading sideways downwards, and we will not see any active movement until November. Like there's literally only two paths that we are actually going to go down, all because these people destroyed our market and our world since the 1970s. And now we have to live with the constant repercussions of what they did and what they continue to do. So, life is always nice. That's the International Monetary Fund has stated that the U.S. Should continue raising interest rates. That's always a kicker to me. Yeah. Let's move on. Please, for the love of goodness, none of you do this. Now, mathematically, we've gone over this before. Mathematically, one of you out there is going to betray me and you're actually going to do something like this. I implore you, in the simplest of words, in the simplest of terms, do not do this. Somebody on TikTok reportedly mortgaged their house for $500,000 just to buy XRP. Yeah. And apparently they've been losing money and have been unable to recoup their initial capital. Data from the end of May showed. The social media personality who goes by the name Money Talk, okay, on TikTok, a platform for creating and sharing videos. I would have never known that. Reportedly sold his house. Is sold or mortgaged? Okay. Either way, they're both terrible. The place where he was living for $500,000 on the 24th of February of 2022, and told his over 50,000 followers that he would be investing in XRP. Based on his analysis of the market, he determined that the cryptocurrency market was in extreme fear. His move was to double down on the market and go against the trend of others. After conducting a sentimental analysis, the TikToker user concluded that the XRP market had reached its lowest point and that the potential to bounce back was monstrous. Sure. Therefore, he invested all of his money into XRP, citing the mantra of being greedy when others were fearful. At the time of his investment, XRP was around 69 cents per coin. And I think it's currently like 46, 47 or something like that. So a lot of people have been talking about how he lost money. And other people are stating that he didn't lose anything because he hasn't cashed out yet, which I think is a bit of a, jumping through hurdles kind of way of, reassuring yourself about the thing that you did. So I repeat once again, I would ask that none of you ever do this. It is impossible for me to ever tell you what to do with your money as it is yours. However, I've been in this market for about a good 95 years now, and I have seen nothing but situations like this before. If any of you have been here since 2017, 2018, you might remember the absolute cascade of videos that we saw around that time of people sitting in their cars and crying after many of them took out loans or tried to take out additional forms of money without their partners knowing, which was always, the best part. The most famous one, or the one that I can remember, I couldn't watch a lot of them. Watching people cry in cars is not like, that's not what I do on YouTube. But there was one guy that was, being passed around everywhere. And the video was, I think he used his daughter's university fund. And he put that into BitConnect because he thought that that was going to be, the next thing. Everyone kept on telling him to do it. He woke up, it was half the value. The next day, it was even half of that value. And then the third day, I think it was like maybe $100 from the 30, 40, 50,000. No, I think it was 75,000 that he put in. And it was a really weird video in that he wasn't asking for help, but he kind of was. It was almost like he wanted someone to reach through the screen and go, "It's okay, bro, I got you. Here's 75,000. Don't be worried." But that's not how the real world actually works. So as we move further into this world where we all believe that the cryptocurrency market will continue to skyrocket in 2024 and 2025, there are going to be a lot of people who get themselves into debt in the conquest of being able to say that they took out debt to be able to invest in the cryptocurrency market, and then were able to 10, 15, 20, 30x their money. I ask you to use caution. The euphoric phase of a cryptocurrency market cycle is quite euphoric, and people think that they will never lose money because the euphoric phase goes on for so long. But no, there is no but. That's basically what it is. I can't and do not want to imagine mortgaging, refinancing, or selling the place where I sleep just to make sure that I can invest in XRP. And here's a gentle word of advice. If you are ever looking to see when a market cycle might be over, we have charts for that. And I know that sounds ridiculous. These cycles last for 4 years. So what actually ended up happening to this individual is that when it happens all the time as well. When the market was done in 2017, that is to say a year after the actual halving has taken place, markets tend to go insane. The halving happened in 2020. Market goes insane 2021. We expect a lull period in the year after for 4 years is how it always happens. So this is why we see everyone talking about 2024 is the halving, prices go up. 2025, it's always the year after, is when things go completely ballistic. 2026 will be the lull period. It's always exactly the same. So this was a runoff. I don't know this person. I assume this was a runoff from the hype in February, the beginning of the year, where this person believed that the same exact way that people believed in 2018 that the market was going to recover, and it did not. It's always the same. It's always the same loop over and over. You have tons of people who see that the market has gone down. They say, nope, this isn't it. It's going to go back up, but they're not paying attention to the actual 4-year cycle. So that's kind of my gentle advice to everyone. This is why you continue to see, like, if you've paid attention, whenever the market goes down, we have tons of news for a 3-4 year period that whales are buying. It's because they know that for the next 4 years after the market has collapsed, they can accumulate at a much lower price. So I'm not looking forward to more news like this, but by golly, we are going to be seeing a lot of it, because that is what always happens within the cryptocurrency space. So that's the TikToker reportedly sold his house to invest in XRP news. I mean, for what it's worth, I would love if XRP went to $7 and therefore this person made $5 million. But, you know, we got to wait for the lawsuit to be over and also for the proper bull run to begin, because that's how the cryptocurrency market works. That's the TikToker news. Please don't do this. Please don't think you're being clever by taking out 5, 10, 15,000 to put into the market. People lose a lot of money that way. So that's all I can, but mathematically, one person out there is going to forget my words and they're going to do it, because that's how math works. And yeah, let's move on. In quite popular news, and I'm not really understanding why, Binance has announced the removal and deletion cessation, okay, this is, SAT word, of trading for a number of Australian dollar trading pairs. The affected pairs are ApeCoin, Avalanche, AXS, I don't know what that is, Polkadot, Phantom, Chainlink, Sandbox, and Shiba Inu, all against the Australian US dollar. However, it is important to note that less than 1% of Binance users are using the Australian dollar pairs. Here's the tweet for it right here. The decision to delist these Australian dollar trading pairs comes as part of Binance's regular review process, in which various factors are taken into consideration, including trading volume and liquidity. If it's only 1%, then I assume there was barely any liquidity. Recent disruptions related to PayID AUD deposits for Binance users have caused price volatility in some AUD pairs. In order to better protect users and ensure a stable trading environment, Binance has made the decision to remove and cease trading on these specific trading pairs quite popular. I think it's because the word Binance delists, of course, is going to make headline news. It says here because of a regulatory hurdle. I don't know exactly what that could be. Maybe it's some kind of paperwork that they simply don't have. We had recent news that Binance is also slowing down operations within Canada because of regulatory problems, extra paperwork that needs to be filed. I don't know. We barely ever hear about Australia in the crypto market. Nonetheless, the Australian dollar, Australian pairs, or Binance or Australia. So maybe the trading volume there is just so low that it's not worth it. Who knows if they're, we've gotten no news that they're going to be creating a Binance Australia or anything like that. But the news is there are a number of Binance delistings, but they are mainly against the Australian US dollar. So, you know, if you're in Australia, I'm sorry for the heat, the gigantic spiders, and the loss of the trading pairs. But if you're not, you know, you're pretty cool. Binance usually does a lot of like normalized delistings for other cryptocurrency trading pairs, but they're coins that you've never, ever heard of and also should not be having in your portfolio. Just throwing that out there as well. That's the Binance Australia news. And yeah, let's move on. I don't know why this website keeps doing that. It's so weird. Yeah, I do hope that you have all enjoyed. I do hope that you all are having a great day, great morning, great afternoon, great evening, wherever you are, wherever the heck you might be. I do hope it's absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See you.